Over the past 25 years, Australian housing prices have skyrocketed by 500%, while wages have only doubled. But this housing crisis is just one part of Australia's economic house of cards. What happens when your biggest customer starts tightening their belt? China is responsible for nearly 40% of Australia's exports, meaning a Chinese economic hiccup could send shockwaves through Australia. There are several alarming trends that call into question Australia's future. Let's take a look at the factors that could topple this precarious position. China's economic juggernaut, once the driving force behind Australia's commodity boom, is showing signs of fatigue. Recent data paints a sobering picture of China's economic trajectory, with GDP growth rates plummeting to around 3% in 2023, a far cry from the pre-pandemic average of 6 to 7% per year. This dramatic slowdown is a fundamental shift in the Chinese economic picture and has major implications for Australia. As China's growth engine sputters, its demand for Australian commodities, particularly iron ore, is waning. This threatens the very foundations of Australia's economic model, which has long relied on these exports to contribute billions to the country's GDP and support thousands of jobs across the country. The impact is already evident in mining towns like Port Hedland in West Australia. Once a bustling hub of iron ore exports, Port Hedland is now grappling with job losses, declining property values, and reduced local investment. The town's experience reflects the challenges faced by Australia's resource-dependent regions. China's pivot towards a consumption-driven economic model will only make things worse. The CCP's solution to their economic challenges is to shift focus from building new infrastructure towards getting Chinese citizens to buy more appliances, cars, and other products made in China. This strategic reorientation, called Made in China 2025, attempts to address China's internal problems with its aging population. In addition to reduced commodity demand, China can also wield its economic might as a political weapon. In 2020, China imposed punitive tariffs on Australian goods like barley and wine. The impact was immediate and severe, with exports in these sectors plummeting within months. Ideally, Australia would diversify its export markets and reduce its dependence on China as a primary trading partner. But finding another market or markets capable of absorbing the volume of commodities that China has been consuming would be nearly impossible. And as Australia grapples with these economic shifts, a housing crisis looms on the horizon. Despite well-paying jobs and years of savings, countless young Australians remain priced out of the property market. Since the 2020 pandemic, national home prices have surged by 33%, far outpacing wage growth and creating an ever-widening gap between income and housing costs. At the heart of this crisis lies the controversial policy of negative gearing. Introduced in the 1980s to stimulate housing supply, this tax incentive allows property investors to deduct losses from their rental properties against their taxable income. However, instead of increasing affordable housing, negative gearing has fueled a frenzy of speculative investment, transforming residential property into a lucrative investment vehicle. As investors, enticed by tax breaks and potential capital gains, flood the market, they price out would-be first-time homeowners. And further crowding the property market is Australia's immigration policy. The internet is full of shady sites and trackers, so online safety is more important than ever. That's why you need a solid VPN. CyberGhost VPN, today's sponsor, routes your traffic through a secure encrypted tunnel, keeping your IP hidden and your data private. Just turn it on before you browse to encrypt 100% of your traffic through secure servers, so no one will know your online activity. CyberGhost VPN doesn't keep logs, so they can't even know what you do online. With just a few clicks, you can change your virtual location and unlock geo-blocked content from tons of streaming services, or even snag better online deals and play games blocked in your region. CyberGhost works on all major platforms: Windows, Mac, Android, iOS, even smart TVs and consoles. One subscription covers up to 7 devices, perfect for sharing with family and friends. Right now, they're offering $2.03 a month, plus 4 free months. That's 84% off, along with a 45-day money-back guarantee. Join over 38 million users by grabbing your discount in the link in the description. Stay safe out there. In 2023, 84% of Australia's population growth was from overseas migration, the highest on record and 4 percentage points higher than 2022. And that year of record high migration coincided with the longest consecutive streak of GDP per capita falling in Australian history. Major cities like Sydney, Melbourne, and Brisbane are experiencing unprecedented demand for housing, creating the perfect storm of scarcity and skyrocketing prices. The construction industry struggles to keep pace with relentless population growth, barely making a dent in the housing deficit. On top of all this, Australian banks have been pursuing aggressive lending practices. Financial institutions have been all too willing to extend credit, with interest-only loans making up a significant portion of mortgages. This approach has allowed borrowers to take on larger debts than they might otherwise afford, further inflating the housing bubble. Australia's household debt-to-GDP ratio now stands at a staggering 211% of disposable income, double that of the United States and among the highest in the OECD. This mountain of debt represents a significant vulnerability in the Australian economy. If interest rates rise suddenly or unemployment increases, many households could find themselves unable to meet their mortgage obligations. The ripple effect could trigger a broader economic crisis, potentially dragging the entire economy into recession. Low interest rates have played a crucial role in sustaining this bubble, encouraging Australians to take on larger mortgages in the belief that property values would rise indefinitely. However, as global economic conditions shift and central banks reassess their monetary policy, the era of ultra-low interest rates is over. Eventually, this housing bubble will burst, and Australia will have to figure out a way to foot the bill. All of this makes Australia's geopolitical calculus especially tough. Historically, Australia's strategic alignment has been firmly rooted in Western partnerships, particularly with the US. However, the rise of China as a global power has forced a reevaluation of this traditional foreign policy. How do you balance security interests with economic dependencies? The formation of the Quad and Australia's entry into the AUKUS Pact underscore its commitment to Western security frameworks. These alliances, while bolstering Australia's defense capabilities, have strained its relationship with China, its largest trading partner. The acquisition of nuclear-powered submarines through AUKUS particularly irked Beijing, potentially escalating regional tensions and raising concerns about an arms race in the Indo-Pacific. Australia's dual dependency on China for trade and the United States for security creates an unsustainable long-term position. This precarious balancing act is further complicated by the fact that both China and the United States are likely to demand greater loyalty and commitment from their partners in the coming years. So ultimately, Australia stands at a crossroads, and the path isn't paved with iron ore. The lucky country's decades-long mining boom created unprecedented wealth, but it also bred complacency. While nations like Israel, Singapore, and South Korea transformed themselves into innovation powerhouses, Australia doubled down on digging stuff out of the ground. Mining still accounts for nearly 70% of Australia's exports, with the majority headed to a single customer. Australia's universities rank among the best in the world, yet Australia primarily uses them to sell degrees to international students rather than driving innovation at home. While Singapore built Biopolis and South Korea dominated semiconductors, Australia's R&D spending has actually declined as a percentage of GDP over the past decade. The question isn't whether Australia will face economic pain in the 2030s. It's whether that pain will lead to real reform or band-aid solutions. For a nation that has surfed from one commodity boom to the next, learning to swim in choppier waters won't be easy, but the alternative is an even riskier gamble. Don't forget to click on the link in the description to get that special discount on CyberGhost VPN. Protect your data while you browse and access all the content on the internet for just $2.03 a month. Go check it out.